Real estate financing, a comprehensive guide to private money, private equity, and traditional loans. When it comes to financing real estate investments, there are several options available to investors. These include using private money, private equity, and traditional loans. Each option has its own set of pros and cons and is best suited for different types of investment properties and investors. Private money is a type of financing that is provided by individuals or small groups of investors. This type of funding is typically used for short-term investments or for properties that are not suitable for traditional bank financing. The main advantage of private money is that it is often easier to obtain than traditional bank financing and can be used for a wide variety of properties. However, private money is typically more expensive than traditional bank financing, and the terms of the loan may not be as favorable. Private equity is a type of financing that is provided by a private equity firm. This type of funding is typically used for larger, more complex real estate projects, such as apartment buildings or commercial properties. The main advantage of private equity is that it can provide a significant amount of capital for a project, but it also comes with a high degree of risk. Private equity firms typically expect a high rate of return on their investment and may have a significant amount of control over the project. Traditional loans, such as those provided by banks and other financial institutions, are the most common form of financing for real estate investments. These loans are typically used for properties that are considered safe investments, such as single-family homes or small apartment buildings. The main advantage of traditional loans is that they are relatively easy to obtain, and the terms of the loan are usually favorable. However, traditional loans are often more difficult to obtain for properties that are considered risky investments, such as fixer-upper properties or properties in declining areas. The type of financing that is best for a real estate investment will depend on the specific circumstances of the investment, including the type of property, the investor's experience, and the investor's risk tolerance. Understanding the pros and cons of each type of financing is essential for making an informed decision about which type of funding is the best fit for a particular investment. There are several other types of financing that can be used for real estate investments, including hard money loans. These are short-term loans that are typically used for fix and flip properties. They are often used by experienced investors who need to quickly acquire a property, make repairs, and resell it for a profit. Bridge loans. These loans are used to bridge the gap between the purchase of a property and the permanent financing. They are often used by investors who are flipping a property or need to purchase a property before they have sold their current property. Home equity loans. These loans allow homeowners to borrow against the equity in their home. They can be used to purchase investment properties, but the property being purchased must be a second home or investment property, not owner-occupied. Commercial mortgages. These loans are used to finance commercial properties, such as office buildings, shopping centers, and apartment buildings. They often have stricter requirements than residential mortgages and typically require a larger down payment. Crowdfunding. This is a newer type of financing that allows investors to pool their money together to fund a real estate project. This can be a great option for small investors who want to participate in a real estate investment, but don't have the means to do so on their own. FHA loans. These are government-backed loans that can be used to purchase a single-family home, a duplex, triplex, or fourplex, as long as one unit is occupied by the borrower. It can be a good option for first-time home buyers who have limited funds for a down payment. It's important to note that each type of financing has its own set of qualifications, terms, and conditions, so it's important to research and understand the options available before making a decision. Additionally, it's always good to seek professional advice from a financial advisor or mortgage broker to determine which financing option is best for your specific investment goals and circumstances. This, and comprehensive and fact-based articles like this, can be found at www.reiguideservice.com in the blog section or on YouTube, Rumble, and many places podcast can be found. This information is free and is provided to give real property investment guidance to those looking to expand their circle of knowledge. Thank you for listening.